morning, everybody. Where to begin? I guess the first thing to say is that I have to apologise for the two things. First of all, my voice. I'm a little bit. There's been lots of talking, so I'm a little bit what we call hoarse. And the second thing is clearly I brought the weather from London, so I apologise for that because you know when you get asked to come to Tel Aviv or to Israel in November, it's a simple decision. It's yes, because you're from London and it's always raining and it's cold and it's dark and it's wet. And I come here and it's somewhat, so it's my fault, so I apologise. But I'm going to take it back with me at the end of the week. So, that's the first thing. The second thing is that I would obviously encourage you to come to the United Kingdom because clearly now the pound is very weak and it means that it's very cheap. Somebody told me recently that it's the cheapest place in Europe to now buy a Louis Vuitton bag. I'm not sure that's a good thing or a terrible thing, but there we are. Falling pound means it's good for tourists. So come to the UK. I guarantee lots of traffic, bad weather, grumpy people, and it's still very expensive. But there we are. I've said my piece. I do not work for the tourist board of the UK. However, what we're going to do today is we're going to talk about a couple of interesting ideas that we focus on in the UK. And increasingly they're relevant to investors in Israel and in the wider world. And I think perhaps this little statement here is more relevant today than at any time in the last 10 years. I come to Israel a lot. One of the original shareholders of Prestige was an Israeli lawyer, and he's now retired and is no longer involved, but we have a long-standing friendship and relationship with him and many people in Israel. So I've been coming here since about the year 2000. I come here multiple times a year. I'm amazed every time I come here, the traffic gets worse. But everything else seems to get better. And so that's a good thing. Traffic is clearly a key economic indicator to wealth and success. Michael was telling me on the way here that 200,000 more cars are on the Israeli roads today. 350. Yeah. In a year. So your traffic's going to get even worse. There we are. Welcome to London. So perhaps the other interesting thing for us is that we have two interesting elements that are going on with us in the UK with our business. The first is that Prestige is a group of companies, and we have a number of different businesses around the United Kingdom, not just in London. So we have Cheshire, Cambridge, Norfolk and London. And then outside of the United Kingdom we have other operations in a number of other financial centres. But what's interesting is that one of our businesses has just moved office in the last month, and they are subletting a floor of Bank Lumi in London. And story number two is that for the last nearly 5 years we've had a joint venture business with Bank Lumi where we manage money and lend money, because it's a lending operation, on behalf of Lumi in London. So there's a strong relationship even where we are with Israel and so forth, just as anecdotal. Now, I like to start things at the end and work back, so you'll have to forgive me that I'm going to skip to the end of this, and now I'm going to bring it all the way back to a very focused point in a minute. Some friends of ours recently have done some analysis on global equity markets. Now today we're not going to talk about the stock market, we're going to talk about something that is an alternative or complementary to the stock market. But before we talk about that, I want to show you this and draw it into some very specific points. So our friends in Switzerland suggest that the United States, which is approximately 40% of all equities is in the US, is expensive. And forget that my friend in Switzerland says it's expensive. 1 year ago, the chairman of the Federal Reserve, Janet Yellen, specifically said that the stock market looks richly priced. Richly priced. And that was a year ago. And it continues to go up. And it continues to go up because of a number of reasons. There's a lot of stimulus, and there's a new president who could be crazy or could be the saviour of America. Who knows? But the point of it is that the market is in a bull run. It's in a bull market, but it's a very, very mature bull market. It's probably the longest running bull market in the history of the market. So it's quite mature and hence richly priced. So these people have said, well, these markets, in their opinion, everyone has a different opinion, looks expensive. And they've also done the same analysis on some currencies. But what's interesting is that they don't suggest that the US dollar is as overvalued or expensive as perhaps the stock market. What they're suggesting is that the Chinese currency is very overvalued. So you could see further devaluation in China in the future. So again, we're not going to talk about currencies and we're not going to talk about equities, but we are going to talk a few more minutes about specifics around equities. And that is this. This is the UK stock market. And the UK stock market is the 4th largest equity market in the world. And by some estimates, the most international of markets, because lots of companies from around the world have income and activity outside of the United Kingdom. The UK is the 5th biggest economy in the world. It's the 2nd biggest economy in Europe. We have 65 million people living in the UK. This here is December 1999, before the turn of the century. That's a long time ago now. That's 17 years. I'm starting to feel a bit old, clearly. So, that stock market is lower today than 17 years ago. And during that 17 years, it's been a bit of a roller coaster of a ride because it's dropped 50% in value twice. And history has a way of repeating itself. So, who knows, past performance is no guide to future results, but if it fell 50% in value twice, I think it's fair to assume it could do that in the future. Now, over the summer, in the UK, we hit a milestone. We've had an interesting summer. We'll talk about certain things in a moment, but over the summer, we had a milestone, and that milestone was that the British pension funds have now a £1 trillion pounds deficit. And that's for two reasons. The first is that in the year 2000, 17 years ago, the average British pension was 70% in equities. 70. Today, the average British pension is 35% in equities and 65% in cash, bonds and stuff that isn't equities. And this is not just a British thing. This kind of thing is happening across Europe and in many parts of the world. And it's partly driven by the fact that when the market did this, people got scared and they took their money out. And when the market did this, people got scared and they took their money out. And they never went back in. Or, well, they missed all of this and they missed all of this, and now we have a £1 trillion problem in the UK. So, the reason I tell you this is that there are a number of stock markets around the world that increasingly look like this. If you look at Japan, which is the world's second or third biggest economy, the Japanese stock market today is significantly lower than 30 years ago. It's never recovered. It may not ever recover in our lifetime. So Japan looks like a similar story. So in countries like France, Italy, Spain, they all have these huge pension fund liabilities. And that is a huge increasing problem. And of course we know that sometimes the market can get a little bit volatile. And we're going into a new phase in the market now because we have rising interest rates in the United States, and yet we have this strange situation where in other parts of the world you have negative interest rates. You have to pay the government to buy their bonds. Much of Europe operates in negative interest rates. If you go to Sweden, you have to pay negative 50. If you go to Switzerland, negative 75. Same in Japan. So it's a real problem because you've got America that seems to be flying and a lot of the rest of the world just in a funk, not really working. And partly also is that you've got a situation where volume on a lot of these markets, again, has never recovered from 10 years ago. If you have less volume, you have less liquidity. If you have less liquidity, sometimes you get more volatility. In a rising interest rates environment, at a time where it already looks richly priced, you might start to get a little bit more volatility. So the market may still go up, but it may get a little less certain and a little bit more volatile, partly driven by what's going on with the White House and the new president, and partly driven by lots of other macro situations. So why am I telling you this when actually we're in the lending business? We lend money because there's a couple of very specific equities that I want to show you, which are the reason why we are in business. So I'm going to go back to the beginning. There we are. And it's that. That is two big parts of that index that you just saw. In 2007, this was the world's biggest bank. 8 years ago this month, this bought half of Lehman Brothers in New York. Don't think it's worked out for them. 97% loss on the world's biggest bank. That's a great investment. And that's the problem, because you could change the names and you could call this Deutsche Bank, Credit Suisse, UniCredit, pick another bank. They've all got very similar looking share price. They've never recovered. Here's another thing. In the UK, as you know, we have a very large financial services economy. And the banks have done many, many bad things to many companies and many individuals, as we know. Every other day, every other week, there's a story going on about something else else, another fine, another discovery, another revelation of something bad that's gone on by the banks. There's one particular scandal in the UK that probably stands out more than most, and that is, and you can do a Google search later, and it's called PPI, Payment Protection Insurance. For the last 20 years, almost everybody, whether they were an individual or a company in the UK, when they took out a loan, the bank took out an insurance policy in case they couldn't pay the loan. Even if they said they didn't want it, sometimes they still took one out. And they charged them for it. And most people didn't even know that they had this insurance policy. So a number of years ago, this was one of a number of scandals and revelations that came out, and the government said, this is bad, you as a consumer can claim compensation from the banks. So, in the last approximately 5 years, the British banks have paid out £40 billion, that's 55–60 billion dollars in compensation just for PPI. Now, if you're a bank, banks are leveraged. If a bank has a dollar, they can actually lend maybe $8 or $9. That's £40 billion that didn't get lent. That's £40 billion perhaps leveraged 8 times that didn't get lent in the British economy in the last 5 or 7 years. And that's just one scandal and one bad thing that the banks have done. And I have a very long list of many other things that they've done. And in the United States, the numbers are even bigger. And across Europe, this is happening. So, the banks now operate differently. They've got much stronger regulation, and they now have to have more capital, a safety buffer. And for many years, the banks would operate with a very small amount, 3–4% Tier 1 capital. Today, some banks have to operate with 12 or 13% capital. And that's a lot of money that, again, now doesn't get lent because they're hoarding cash. So the banks are also being told by the regulator to operate differently. And what that means ultimately is that they're lending less money to fewer people, and they're taking longer to make a decision. And that's a problem across the world, but particularly in Europe, and certainly in the United Kingdom. And you can see that many of these banks, their balance sheets, their share price, have never recovered. Sunday is an interesting day in Europe because in Italy there's a vote to reform the economy. And many people believe that they will lose the vote and they will not be able to reform the economy. Italy has a real problem with its banks. Many of the banks are bankrupt. They're insolvent. The share price is less than the net asset value of the bank. Because if you take Deutsche Bank, for example, I read recently that it has approximately 7,000 lawsuits currently outstanding. That's going to take a very long time to resolve. So, the banks operate differently now to how they did historically. If I go back to the United Kingdom, here's one statistic for you to note. In the last 1 year, 600 bank branches have closed in 1 year. 600. That's 2 a day. And the big casualty is that the rural community is the big casualty. The city branches, the urban branches, they're all open. But the the branches in the countryside are closing fast. So that means that there are fewer bank managers, commercial lending officers running around the countryside providing credit to small business. And this is at a time when small businesses are desperate for credit. In the UK, we have something close to 5 million companies. A very small number of those companies export or import. So very little export to the European Union. They're domestic, they're provincial, they serve the local community. So, credit for the next 20 years is going to be a problem across Europe and certainly in the UK. We could talk for hours, you could read this offline, about why the banks lend less and the opportunities. But we'll move on. If you're a small business, and that's the area that we focus on, there are a number of other concerns and problems in the UK and in other parts of Europe. So credit is number one, but number two is that we have almost the most expensive electricity in Europe, and it's set to get more expensive. So electricity today is about 90% more expensive than 10 years ago. And there's a number of reasons for this. The first is we didn't invest for 30 years in modernisation, in productivity, in efficiency, in capacity. And there's one other big problem. And that problem is the big story of the summer, Brexit. Brexit is a protest. It's an emotional vote for change. And the problem in the UK is that we have nearly 8 million people. That's what? How many people live in Israel? Roughly. 8. Right, so the population of Israel living in the UK who weren't born in the UK. We have about 1,000 people a day moving to the UK. This is why we have Brexit. We have the lowest unemployment in Europe outside of Germany, and it's an economy that people want to move to. As a Londoner, I have no idea why anyone wants to come and live in London, because the traffic's bad, the weather's bad, everyone's grumpy, the taxes are bad. I mean, it's all bad.
Good restaurant.
The people are nice.
Good restaurant.
You haven't met my mother-in-law. Hold that thought. So, she's all right. And she's asleep. So, electricity is a real problem, because if you didn't invest for 30 years and 8 million people turn up, you're going to have very expensive electricity. And so the words that you're going to hear for the next few years in both America and the UK is, we're going to invest in infrastructure, and this is the new stimulus for the economy. Everyone's going to have a job because they're going to be building bridges and roads and power stations and. But that takes years. Meanwhile, our small little businesses are being drowned in new red tape and bureaucracy. There's so much new rules around health, financial services, energy and food. We'll come to that. We also have some of the highest taxed diesel in Europe. Now, if you're a rural business, a countryside business, you're seeing all your local bank branches close, and you use cars and vans and trucks to move around, and it's expensive. The tax is the tax. Doesn't matter what the price of oil is doing, you're still paying a lot of tax. So apparently it's very good to live in Luxembourg if you want cheap diesel. But I don't know if any of you have been to Luxembourg. Nice to visit. I'll come back to that slide. This slide, we have rising employment costs. Now we have these big American companies like Google and Facebook and Starbucks and Amazon that pay very little tax in the UK. They employ lots of people, they do an enormous amount of business in these countries, and they're all structured in Luxembourg, because Luxembourg is a modern tax haven, for want of a better analogy. And so the government now, instead of charging corporation tax like it used to, they basically now say to the company, every employee that you employ, you have to provide them with a private pension. And there's a new minimum wage. And the new minimum wage is a lot higher than the previous minimum wage. So, clearly, wage costs are going up, employment costs are rising. The new minimum wage has just increased in the last year by over £1 an hour. And they say that that £1 an hour will attract another 500,000 immigrants from Eastern Europe to earn that extra £1 an hour. Did I mention there's 1,000 people a day coming to live here? And here's the single biggest cost to many small businesses. Waste. What do you do with 65 million people's waste every day? In the UK, we like to dig a big hole in the ground and we call it landfill. And we put a lot of our waste in the landfill. Now, in London, I heard this recently, they now speak 300 different languages. Try telling somebody from Somalia how to recycle in 8 different buckets of plastic. Yeah, it's an enormous undertaking to do it. So we're running out of landfill, we're running out of space. A little bit like Israel, the UK is a small country, but lots of people want to come and live here, but you've got better weather, but the same traffic. So now the government charges a tax for landfill, and it is £84 a tonne for household rubbish to go into landfill. Now, a lot of our customers are food related, agricultural, farming, and the price of landfill waste for some of these is double this cost. So you're a food business and you've got rising wage bill, rising energy costs, rising waste costs, and it's really difficult to get credit. So I've given you all the bad news, I've gotten it out of the way. What do we do as a business? Because we've been talking about the stock market and how it looks a little bit expensive. We're talking about all these strange different things going on in the United Kingdom. What do we do? Oh, one other thing before I go on to that. We're not very productive. So we have very low unemployment, but we're not very productive, particularly around food. I will just say this, I go back to my waste. The UK wastes more food than any other country in Europe. And we're also now, unfortunately, the most obese country in Europe. So sadly we're becoming a little bit more American and less Mediterranean. We were never Mediterranean. So productivity is a real problem. So I'm a small business, I need credit, I'm trying to reduce my costs and become more efficient and productive. So I'll come back to this in a moment and specifically say, so what do? We lend money, or we lend an asset, or we finance a project. And we typically have 2 conversations with our customers. The first conversation we like to have is, Mr. Farmer, Mr. Food Company, Mr. Rural Business, we can save you money. We can help reduce your costs. How do we do that? Well, we will finance, rent, lease a more modern machine, a more modern equipment, specialist vehicle that produces more in less time using less energy, saving you money. For larger customers, we have a second conversation. And that conversation basically says, we can make you money. How do we make you money? We will take your waste and turn it into gas. You may have some spare land and we'll build you some solar panels. And amazingly, yes, we have solar panels in the UK. People never believe this. Wherever I travel around the world, I say, but it always rains. I know, but they still work.
Few days only with sun in UK.
Sorry?
It's only a few days in the sun.
Absolutely, but
So
so long as there's so long as there's light, we have solar panels. In fact, the UK has almost the most solar panels in Europe. Lots and lots of people are putting solar panels on the roofs of their house because we have very expensive electricity. So if you can reduce your costs, think if you're a small business. So all of this is where we come in and we finance in a productivity gain and we try to finance out a particular cost in the business. So the kind of lending that we are doing is what we call non-commoditized lending. Commoditized lending is personal loans, credit cards, car loans, home loans. We don't do any of that. We don't lend money to private people, private individuals. We only lend money to companies. And we get lots of security. Let me show you some of the security that we get. I'll go back to here. Increasingly, we will lend an asset and we will get other security in addition to the asset. So if it's a tractor or a car or a truck or a specialist machine, that's one thing. We will get maybe a personal guarantee from the board of directors. We may have credit insurance, but increasingly we get land, arable farmland and or buildings and property. And I'm probably not the first person to tell you this, but we've got pretty much the most valuable farmland in the world and some of the most expensive houses in the world. It's gone a bit crazy in London with house prices. They have houses in London that are selling for £200 million, which is just a crazy amount of money for a house. And then they don't even live in it. Crazy. So we get lots of security. But increasingly, as a trend in our world that we lend, we get a thing called a debenture, a charge over the bank account of the company that we're lending to. So if there's a problem, we can freeze the bank account. We phone up the bank and say, shut that account. Don't have to go to court, don't have to go in front of the judge. Freeze it in 15 minutes. So that gives you a lot of control and influence in any discussion about a non-performing loan. So the security that we're getting on our lending is very strong. But we're not doing home loans and we're not doing real estate. So the average £1 million non-real estate commercial loan is taking upwards of 6 months to approve by a UK bank. So if we can get you the money in 6 or 8 weeks, surely there's an opportunity. So, the other side of it, from our point of view, is from an investment point of view. Investors are increasingly looking at this for 2 reasons. For the last 20 years, we've all been exposed to ever increasingly complex and sophisticated investment opportunity. Let me tell you about my algorithm and my model and my system and my black box and all of this crazy stuff. This is back to basics. This is low tech, which is kind of interesting since I'm into a very high-tech country in terms of Israel. But this is really boring and low tech. people like this because what we are doing is none of this. We're running around the UK countryside lending money to small business. And we have a team who has done that for many, many years. And we'll talk about us in a moment. But it's none of that. And it's increasingly this. We don't use leverage, derivatives, exotic financial engineering. It's very back to basics. And there's another reason, perhaps the most important reason. I'll go back again. And it's this. So we were talking a moment ago about the stock market and how it could get more volatile and more uncertain in the future. This is the MSCI World Index. That is the stock market of stock markets. I think there's about 28 different stock markets in here. About 40% of this index is the US stock market because it's weighted by the size and different things. And these are the negative months in the last 4 years. At the same time, in the same negative month, two of our funds. That is adding value to a portfolio. Stability, consistency, non-correlation. And this is why we manage money in Israel for pension funds, for family offices, for independent financial advisors, and in other countries like Switzerland. We have over 70 clients in Switzerland, including a cantonal pension fund. So it is clearly adding value in a portfolio. And that's what people want in their portfolio. Now, we should always have lots of equities in our portfolio, depending on what our risk profile is, but clearly an allocation, some form of alternative investment like this is increasingly becoming attractive to investment portfolio advisors and so forth. And that really is sort of the main gist of what we're doing, and I think really to sum it up, this is the sort of thing that we're trying to do. So look, the stock market's a great thing. The stock market will always, when it goes up, outperform. You're not buying this to outperform the stock market on the upside. You're buying this to smooth out the bumps and to slightly reduce the correlation of your overall portfolio. That's increasingly what people see as a benefit and why they are increasingly looking at us as a space and us as a company. So, a little bit about us. I go to the end. We manage quite a lot of money these days. Last month, in a particularly good month, I know the space that we're in is growing, and I'll go back to the beginning because there's one thing I want to show you, and it's that. A year ago, a group in the UK called AIMA, which is the Alternative Investment Management Association, did an analysis, and they said, in their opinion, in their research, there's nearly $500 billion US now in lending funds and lending investment strategies. That's a year ago. That number has almost certainly increased considerably since then. So I know from our perspective that we're growing. 1 year ago when I was here, we was receiving about 100 hits a week on our little website. Today we get about 1,000 hits a week on it's the same website It's not a very good website, but we're working on it. The second issue. In the last 8 weeks, we've had 15 different institutional investors come to the UK and visit our operation in Cambridge and London. We've had a group from South Korea, Spain, Switzerland, Finland, Sweden. I mean, lots of different groups from all over the place come and see us. And perhaps more important than that, just last month, as a group, we raised about $100 million last month. And we don't raise that kind of money every month, but it's clearly a space. And that was a sovereign wealth fund and a pension fund that's given us that kind of money. So we manage money for financial advisors, private clients, and institutional investors. And increasingly, they're seeing the benefits of this. So that really, I can come back to us. Where are we? This is what people are buying. But really, what they're buying is that our investment in people and process. And when I get asked, well, this all sounds very interesting, tell me what the risks are. The two biggest risks here are your two biggest benefits turned upside down. People, process. All of this is a people business. This is not a click and a swipe and an algorithm on the website. None of our lending is done on the internet. We go out and have a conversation with a small business and we try to help them and identify strategic areas of their business, areas of weakness where potentially we can finance in a productivity gain and finance out a particular cost or set of costs. Now, the British banks are lending, they are still lending a lot of money, but they're taking longer to make a decision and they're lending less than they were and they're taking a longer time to make the decision. But they're lending anything between 10 and 13 billion pounds a month. We're trying to lend 1 to 200 million pounds this year. So we could be very picky and choosy about where and who and why and how we lend money. And that really is who we are and what we do. But we have about 100 people in our group of companies. And just in November, 5 people have joined our group in different areas of the business. So it's a growing team. And what that team gets us is two things. It gets us more contacts, network, relationships, deal flow, opportunities to look at. And the other thing it gets us is more collective experience and wisdom in dealing with risk. Now, I often say it's really, really easy to lend money. It's the oldest thing in the world. Lending money. Second oldest thing. It's really difficult to get it back. Sometimes you don't get it back. Just ask Barclays or RBS or Deutsche or UniCredit.
Or Banca Poli.
Or them. So, the more skill, the more infrastructure that we have, the better it is for our investors. And with what's been going on in the banks, it is increasingly easy for us to recruit former commercial, not investment, commercial bankers to join our team and bring that wealth of contacts and that wealth of experience to a different business. We're not a bank, but we lend money or we lend assets, but in a strategic, tactical way to help a business become more productive so that he can get some of these rising costs down, become more efficient and economically viable as a business. And I think really the final thing to say before my voice completely goes is you've actually done something positive. Think about that. You meet lots of different investment people and they're talking about, you know, pushing a number around a computer screen for the next 10 years to get your returns. And that's great. There's a place for that in your portfolio. But we've created jobs. We've lent nearly £1.5 billion to 7,000 small businesses. Jobs created, jobs saved, wealth created, tax generated. There is actually something a little bit positive about this. So that is us. And if anyone has any questions, we can take them now or later. But I'm running out of voice.